What is a home loan rate lock, and are rate lock fees worth it? That's what we're going to cover today.
And be sure to stay to the end because we're going to give our own opinion on whether you should do it or not.
Before we start this video, if you find it helpful in any way, do me a little favor and hit the like button. Or leave a comment below for the YouTube algorithm. Just a little gesture like that can make a huge difference to the channel. And if you haven't already, consider subscribing below. So thanks you guys, it really means a lot to us, and let's dive right in.
Okay, picture this. You decided to fix in your loan at a low rate. The loan's approved, the loan contracts are signed on the low rate, and just before settlement, the interest rate is hiked. This is happening right now.
The solution is rate lock.
Well, hold a minute, let's rewind because I want to know what rate lock is.
Rate lock is an option you can choose when applying for a fixed rate loan. The bank's going to charge a rate lock fee. This can be up to 0.15% of the loan amount. The fixed interest rate that you apply for is locked in, so you're not affected by any movement in the rate before your loan settles. The rate lock typically lasts 90 days, which is an important one to remember, especially if you've got a long settlement period.
Now the question you might be asking is, how does it actually work?
Most people will speak to their broker and shop around for a great loan package with low interest rates before you commit to a mortgage. And you're going to be comparing at that point in time who's better and who's worse. But a lot of people don't actually know that you get the interest rate on offer when your loan's advanced or settled, not at the time you apply for your loan.
Now the best example of this is, imagine you've got a fixed rate from Bank ABC at 1.99%. Before settlement, they increase their fixed rate on offer that's advertised to 2.39%. If you didn't choose rate lock, then you'll actually receive that higher interest rate, even if you sign the loan contracts at 1.99%. So you get that higher interest rate on the settlement date when your loan's advanced.
The good news is with rate lock, if the rates drop to say, for example, 1.89%, then most lenders will allow you to have the lower rate. But if the loans increase to 2.39%, with rate lock, you'd be protected and it would only pay the 1.99%.
It's also worth mentioning that some lenders might not actually give you the lower rate if it falls. So it's important to check with the lenders before you lock in the rate to ensure that if rates keep going down, you'll get the lower amount. All rate locks do cover you in the event that the rate does go up. So let's look at a general calculation of how rate lock works. So let's assume that you're currently applying for a $600,000 mortgage with a 3-year fixed rate at 1.99%. If the interest rate increases to 2.39%, the borrower would be better off paying the rate lock fee. Typically, the rate lock fee on this sort of a loan amount is going to be anywhere from $750 to $1,000, which then guarantees a fixed rate at 1.99%. So in this example, you've got a 3-year fixed loan, you applied for a 1.99% rate, let's say you paid $1,000 for that rate lock. If the rate went up to 2.39%, the difference in interest you'd be paying is 0.4% at $600,000, which is $2,400 per year, which over 3 years is $7,200. So paying that rate lock of $1,000 is definitely worth it in this situation.
It's funny because a lot of home buyers, when we talk to them, think, well, the bank's gouging me $750. Like, why would I pay that? And a lot of times, once we do the numbers, like Nathan explained there, it actually works out way more beneficial.
Especially in recent times, we've seen a lot of funding pressures with the banks recently. In the last 6 weeks, the banks have had 3 or 4 increases between them. We've seen fixed rates go from 1.84 all the way up to 2.59 in that shorter time frame. So rate lock makes a lot of sense in these situations where there's a lot of uncertainty.
And the hard thing is knowing when the right time is for rate lock. Like Nathan said, it seems obvious now, but is it always? And we're going to give our opinion later in the video on if you should use the rate lock and the exact situation when it should apply.
So when will the rate lock begin, Jayden?
It does depend largely on the bank and the lender you apply with. Some banks will apply the rate lock from the date you apply for the loan. This is also remembering it doesn't apply on pre-approvals. It's only on full applications once you've found a place or you're refinancing. Others apply the rate lock from the date that you pay the rate lock fee, which sometimes might take them a week or 2 to process, so be careful of that. Others apply it at the time of formal approval. So if Nathan lodges his home loan application today, but takes the bank 6 weeks to approve his home loan application, then in that case, he might have actually missed out on any benefits the rate lock is going to provide. I guess the warning here is not all lenders work in the same way. So definitely ask your broker, because when they apply the rate lock, will definitely impact the rate you're going to get at settlement.
So Jayden, how long will the rate lock be effective?
Each bank has a different time period for rate lock. Some banks do 60 days, others 90 days. If your loan application is complicated, it's likely to have some delays. If it's not just a purchase, it might be a refinance. You definitely want to choose a lender who looks at the maximum time period being 90 days. That way, if there's delays, there's events outside of people's control, you can have your rate secured.
So Jayden, how does a rate lock fee actually work? Is it just one fee and you lock in all your loans if you've got multiple splits?
Most lenders will charge you a fee for the rate lock feature. The fee amount varies from lender to lender. Some charge a flat fee, like Nathan mentioned before, $750. Other charges as a percentage based on the loan amount you're borrowing. Here's a couple of examples, and keep in mind that a lot of banks do charge per split. So if you have two separate properties, one might be your home, one might be investment, and two separate fixed loans, they're potentially going to charge you a rate lock fee for each of those fixed loans.
In this example, lender 1 charges $750, which is up to a maximum loan amount of $1 million and a maximum fixed period of 5 years. In the next example, lender 2 charges $450 or 0.15% of the loan amount, whichever is greater. And last example, there are some lenders that actually don't charge a rate lock fee. So once again, something to talk to your mortgage broker about and get a better idea. So Jayden, we talked about it before, but what's your opinion on whether you should rate lock or not?
Definitely ask your broker what they're seeing in the wider market. In the recent examples, like Nathan said, we've seen subsidiaries of banks actually move their fixed rates before the main bank did. So it gave you a pretty good indication that if St. George, who's a subsidiary of Westpac, moves their interest rates, then it's pretty likely Westpac's going to move their interest rates soon.
As well as that, when you're talking to your broker, understand if the bigger banks are moving. What we've seen recently is banks like CommBank making a move and then the rest of the market following. So typically, if a big player makes a move first, you can kind of gauge that the rest of the market's going to follow suit.
There's also a lot of other factors at play, including the RBA's rhetoric, what's happening politically, and it can get a bit complicated. But if you get a sense that interest rates are going to move up in the next year or two, which is usually how the fixed rates work, they're based on what the banks think the rate's going to be in 2, 3, 4, 5 years' time. And if it looks like the market's going to keep moving up in the next 2, 3, 4, 5 years' time, it's likely fixed rate will also move too. Not only that, it's worth just doing the hard numbers. Like you saw in Nathan's example, it's a pretty easy proposition that if your rate goes up by 0.4%, it's going to cost you $7 grand, and $1,000 is a pretty easy way to do that. But it's also not always that straightforward. Like Nathan said, 6 weeks ago when the rates were in the ones, no one would have seen the rates moving up that fast, that quickly. But even in a lot of cases we say, well, if the rates go up by 0.1%, and in almost every case, the fixed rate lock fee is actually worthwhile.
So our opinion of the fixed rate lock is it's worth the cost for a bit of peace of mind. Yeah, sure, maybe the fixed rate doesn't change, but paying that little bit extra will give you that peace of mind, especially if you've signed those loan contracts and you're not too far away from settlement and then the bank increases your fixed rate. It's not going to be a good feeling for when you get the keys to your new home. So Jayden, why does a fixed term actually matter?
The rate lock fee is the same if you're going for a 1-year fixed rate or a 5-year fixed rate. It doesn't change. But like we said with the numbers before, if you're doing a 1-year fixed rate and the rate goes up by 0.1% and you're paying 0.15%, then financially it might make sense. If you're fixing for 2 or 3 years, it does make a huge difference because you're paying that 0.1 or 0.15% up front and you're getting the benefit of having savings over the next 2, 3, 4, 5 years. So in a lot of cases, rate lock might not be beneficial if you're only fixing for 1 year or a short term, but 2, 3, 4 years beyond, it's definitely recommended.
So what are the disadvantages of rate lock?
So like Nathan said, rate lock's really important if you want some stability and you're worried about interest rates going up in the time between when your loan's approved until when you settle and move in. The downside is obviously the cost. In most cases, it's not free, and if the rates go down, there are some lenders that won't pass on that lower rate if you're the rate lock, so definitely ask that question up front. Also, the rate lock fee may not get refunded if you decide from the time your loan's approved to settlement that you want to pull out. Rate lock's available to new home loan applications. That's if you're about to apply for a fixed rate home loan, you choose a rate lock option as part of your package. Also for refinancing, so if you're refinancing from Bank A to Bank B, you can get the rate lock there and make sure it's secured. As we've said throughout the video, with rates constantly changing, we definitely recommend this feature for all new home loan applications.
So act quickly. It's always hard to pick the right timing to lock your rate in. However, locking your rate in is highly recommended if you're interested in keeping that low rate. So that's it for today, guys. Thanks for watching. Leave a comment below. Do you think you should rate lock or should you take the risk? So what's preventing you from qualifying for a home loan? Here at Hunter Galloway, we get home loans approved. So if you're living in Australia and looking for a mortgage broker, we can help. Visit us online at huntergalloway.com.au or call us on 1300 088 065 and we'll see you next time.